Welcome to Tesla Daily News Podcast. I'm your host, and today is February 27th, 2026. We're breaking down the Tesla headlines that matter for the stock: pricing power and demand signals, Europe competition, autonomy funding pressure, energy storage threats, and a fresh legal hit tied to charging. Story 1. Tesla's biggest affordability lever is still doing work, but the margin debate isn't going away. Context first. For the last couple of years, the core investor question has been simple: can Tesla protect volume without permanently sacrificing automotive gross margin? Details. A French auto analysis highlights just how unusual Tesla's pricing trajectory has been. The base Tesla Model 3 in France is now priced around €36,990. The same piece notes that, compared with summer 2022, the base new car value is down about €16,500. Impact. That's a clear reminder that Tesla has used price as a strategic weapon, great for keeping the order flow moving and defending share, but it keeps analysts focused on per-unit profitability. The bull case is that lower pricing expands the addressable market and increases fleet size for software and services later. The bear case is that the market starts valuing Tesla more like a cyclical automaker if margins don't rebound. Takeaway. Watch for any sign that Tesla can stabilize pricing while still growing unit volume, because that combination is what re-rates the stock upward. Story 2. Used Tesla prices are rising, and that's a demand signal investors shouldn't ignore. Context. New pricing gets all the attention, but used prices are a real-time read on brand strength, depreciation, and the health of demand after incentive shift. Details. A new study cited by Electrek says used Tesla prices have risen 4.3% since the U.S. federal EV tax credit expired on September 30th. Over the same period, nearly every other used EV dropped an average of 3.6%. The report also notes used EV market share fell about 20% over that time frame. Impact. If used Tesla prices are firming while the broader used EV market softens, that can support Tesla's residual values, which matters for leasing economics, customer willingness to buy, and overall brand pricing power. It also hints that Tesla demand may be comparatively resilient even when policy support fades. Takeaway. This is one of the cleaner, real economy indicators in today's stack. Used pricing strength is a plus for Tesla's long-term unit economics, even if new car margins are still the headline risk. Story 3. Europe is getting tougher, and BYD is turning price pressure into a strategy. Context. Europe has been a key battlefield for EV leadership, and it's also where consumers are sensitive to price, incentives, and model freshness. Details. Multiple reports highlight Tesla's weaker momentum in Europe. One analysis says Tesla continues to lose ground in the region even after the updated Model Y. Another notes BYD's surge in Europe, including commentary that BYD is now selling more battery electric cars than Tesla in Europe. Meanwhile, Electrek reports BYD has launched another promotion: 0% interest for 3 years, and advertised daily payments starting under $5 in its home market promotion framing. Impact. Whether or not every promotion translates directly into Europe, the direction is clear. Competition is not just about product, it's about aggressive financing, pricing, and distribution. For Tesla stock, Europe's softness can pressure delivery expectations and raise concerns about whether Tesla's next growth leg needs to come more from autonomy and energy than from incremental vehicle share. Takeaway. For investors, track European registration trends and whether Tesla responds with targeted incentives or refresh-driven demand. If Tesla holds firm on pricing while competitors subsidize volume, the story becomes about margin defense versus market share. Story 4. Autonomy is accelerating, and Wayve's massive funding round raises the stakes. Context. Tesla's valuation has long included an autonomy premium, with investors debating timelines and regulatory readiness. Details. The UK autonomy startup Wayve reportedly raised about $1.2 billion at an $8.6 billion valuation, with some coverage suggesting the round could reach $1.5 billion, with an additional $300 million tied to conditions around robotaxi deployment. Impact. This matters for Tesla in 2 ways. First, it signals that capital is still pouring into autonomous driving. Investors and strategics are funding alternative approaches, which can compress Tesla's perceived uniqueness over time. Second, it reinforces that autonomy may become a licensing and platform business across multiple automakers, not just a vertically integrated model. Takeaway. Tesla still has scale data advantages and tight integration, but the competitive set is better funded than ever. The market will keep demanding proof, not just demos, in the form of safe, scalable, regulated deployments. Story 5. A reality check on humanoid robot hype hits Tesla's Optimus narrative. Context. Tesla bulls often bundle long-term value across three pillars: vehicles, autonomy, and robotics. Details. Fortune highlighted comments from an MIT roboticist and iRobot co-founder arguing that the vision of humanoid robot assistants is pure fantasy thinking, suggesting practical future robots may look very different, like wheeled platforms with multiple arms. Impact. This doesn't change Tesla's near-term financials, but it can affect sentiment. When the stock is priced for optionality, anything that challenges the plausibility or timeline of that optionality can increase valuation volatility. Takeaway. If you're underwriting Tesla with a meaningful Optimus contribution, you'll want to separate possible from bankable and demand milestones, unit costs, real-world tasks, factory deployments, and a credible path to revenue. Story 6. Tesla takes a legal loss on EV charger patents. A small headline with bigger strategic implications. Context. Charging is no longer just a support function. It's a platform, a standard, and potentially a recurring revenue stream. Details. IP Watchdog reports Tesla lost at the U.S. Court of Appeals for the Federal Circuit in a split decision that upheld certain EV charger patent claims by Charge Fusion Technologies. The court agreed with a reading that a charging control limitation excludes users manually starting and stopping charging. Impact. This is unlikely to be a near-term financial bomb, but it adds friction. Legal uncertainty can complicate product designs, create licensing costs, or slow rollout decisions. At a time when Tesla is expanding charging partnerships and positioning its network as infrastructure, investors generally prefer clean, defensible IP and minimal distractions. Takeaway. Keep an eye on whether this evolves into licensing payments or design changes. Charging economics matter more now than they did when Tesla was purely a vehicle growth story. Story 7. Energy storage competition is heating up as long-duration solutions square up against mega-pack momentum. Context. Tesla Energy is increasingly important to the growth narrative, especially if auto growth moderates. Details. CleanTechnica frames Form Energy as a challenger to Tesla's Megapack 3 rollout, pointing to Form's 100-hour iron-air battery approach, with deployments in Minnesota and additional states under planning. Impact. Tesla's advantage today is manufacturing scale, productization, and deployment speed. Long-duration storage competitors target a different use case, multi-day backup, that could win utility dollars in certain grids. The investor question is whether Tesla keeps dominating the fast deployment, high-throughput segment while others carve out long-duration niches, or whether pricing and share get pressured over time. Takeaway. Watch the backlog, factory ramp commentary, and gross margin trajectory for Tesla Energy. If energy margins and scale expand, it can cushion auto cyclicality and support a higher multiple. Before we wrap, a quick market note. Interfax reported U.S. markets finishing higher in a tech-led session, and Tesla shares were up about 2% on the day in that report. A reminder that Tesla is still trading as both an auto company and a high-beta tech proxy when AI sentiment is strong. That's the show for February 27, 2026. The big themes today were pricing versus margin, use market strength, intensifying Europe competition, autonomy capital flowing to rivals, and strategic legal and energy crosscurrents. For tomorrow, watch for any fresh Europe registration data, updates on incentives and pricing, and any new signals on autonomy deployment timelines, because those are the catalysts that most often move the stock. If you found this helpful, subscribe to Tesla Daily News Podcast, share it with a fellow Tesla investor, and follow for daily updates.